Today we're going to be breaking down what a pip is. This is, I mean, to start off, obviously do subscribe, like, all of that great stuff that everybody tells you to do on YouTube. Check out our technicals. We do technical analyses, chart breakdowns. You've probably seen a bunch of them. You've probably seen Donnie, Crypto Don, Simon Says, both of our resident, technicals experts talking about the charts and this, that, and the other. And you might have been wondering what the hell is a pip? What is this move? What does it mean? You'll hear someone say, oh, consolidation here, convergence, divergence, pips, 100 pips, 40 pips. What does it mean, right? Very simply, guys, I mean, we do have a Medium article here, homegrown kind of educational content. It's available on our Discord as well. But to give it to you really, really simply, right? Anything you trade is one thing against another, generally. With Forex pairs, you're looking at the euro against the US dollar. You're looking at gold against the US dollar, right? So it's a number, it's something slash something, right? Now a pip is essentially the smallest difference between one and the other. That's what a pip is. This is why pips differ depending on the currency pairs you're trading as well. The pips for GBP, JPY, which is the British pound against the Japanese yen, completely different to gold against the dollar, right? Versus currency pairs or whatever pairs. It can differ wildly, as it says. So it depends on how much the currency pair is traded overall, because obviously the value of one or the other will change. And as a result of that, the difference between the two will change. That's like the super, super basic breakdown of what that means. So let's go through the article after that kind of... I always like to give like a high-level overview initially so that people know what it is that you're setting out to learn, and then you kind of connect the dots as you go. So what are pips? Discovering how to use a pip or how to use pip values in your trading can be a great way to help you understand Forex trading. And you really want to be understanding whatever it is you're doing, especially if it's something that's going to make you money. You need to be fully aware of what you're doing, because otherwise you're like a fish out of water. You know how to download MetaTrader, you know how to get the app set up, but beyond that, you don't know shit. Like what is a pip? What is a lot size? What does that mean? What do these numbers mean? You see at the top of the screen 0.025, 0.35, 0. This, that, and the other. That's why we're here. We're gonna walk you through it. We'll make sure you understand all of this stuff. So again, a pip is the smallest unit of price that can be quoted in currency trading. When you see that a quote has moved 100 pips, so when someone sets up a trade and they say, oh, you see that move, bro, that's a 40 pip move, this is what that means. What it means is that the price has gone up or down by, like, for 40 it would be 0.4% of that currency pair. If it's 100 pips, it would be 1% of that currency pair. The price has moved up or down by a percentage of it. All right, so I think that's fairly self-explanatory, but if it doesn't make sense to you, read it again, because that sentence is pretty sound. If you see that a quote has moved 100 pips, that is 1% of the total value of the currency pair that it has gone down or up by. Since every currency pair consists of two currencies, this means, like I said before, that the pip value for each currency pair is going to be different, obviously. USD versus the CAD, a pip is 0.0001 dollar. Versus, again, for the euro against the yen, it's 10 yen equals 1 pip. That's the difference there. So to calculate the value of a pip, how do you do it? You know what the currency pairs are. How do you figure out what the value is of the pip of this specific thing that you're trying to trade? Well, learning how to calculate the value of the pip, first step to understanding Forex trading. The value of a pip refers to the steps from one currency exchange rate quote amount to the next currency exchange rate quote amount, which is measured in points. So for example, again, euro against USD, that's quoted as 1.2533 against 1.2534, right? Then the difference between those two quotes, that is the value of 1 pip. That is what that is. The difference between the two quotes is what the value of 1 pip would be for that specific currency or whatever pair, right? The value of a pip, again, can vary massively. And the key to accurately calculating the value of a pip is to know what currency pair you're trading first off, how much that pair is worth in USD, and then how much you are actually exchanging for the pair. So that's kind of like an explanation of what it all means, what kind of the definition of a pip and how to calculate it dependent on whatever currency pair you're looking at. But then what's the actual utility? How do you actually use it, right? A pip value refers to the smallest unit of change that can be used in currency exchanges, right? In a currency exchange, not in exchanges, excuse me. It is similar to the way people use pennies and cents in the United States when talking about money. Well, I mean pennies, or yeah, it's pennies in the UK, isn't it? On the other hand, currency trading is really done using fixed amounts. In foreign exchange, traders look to trade currencies based on how much one set of currency is worth compared to another. Specifically, individuals will compare one currency's price to the price of another currency based on its value expressed in a different currency. So you'll take one currency's price, right? And you'll compare the price of this one specific currency. You'll contrast it against other currencies based on its value expressed in a different currency. So you have USD, how much is that worth in euros? How much is the euro worth in dollars? Calculate the difference, basically. A pip in Forex trading refers to that little decimal. A pip value can be reported as either positive or negative. All currency pairs have a base currency, which is the first one listed. So for this one, it would be, that's the base currency, right? And the quote currency, which is this one. So the quote and the base, the second currency listed, the example is USD CHF currency pair. USD is the base, CHF is the quote. The pip value is in regards to the fourth decimal place. If a currency pair is trading at 1.29%, as an example, then what you'll be paying out, you'll basically be paying out that amount on any trade involved with that specific currency pair. And in Forex trading, the pip value of each trade needs to be calculated before taking any position, because it will affect where your stop loss and your take profit levels are placed. That's effectively, when you go into set up a trade, you'll put in the numbers at which you want to exit the trade if you're in a loss, like the final amount of loss that you're okay with. That's your stop loss. It stops the loss. And same token but flipped, take profit is like the green upper band opposite of that. And the way you figure out, okay, so I want to take a trade, first thing you want to know is how many pips you are aiming for. You can't just set a random stop loss because you feel like it. I mean, you could if you want to, but that's stupid. And you can't just set like a random open TP, which is a take profit, because what happens? I mean, you might be in profit, but there's no end to it. So what are you going to do? You're going to wait until it infinitely goes up? When are you going to pull out? You might tell yourself, oh, I know when to pull out, but that's a risky game, isn't it? So, a pip value that, so when you go in with a predetermined number of pips that you're aiming for, it usually you end up a little bit richer, and you end up a little bit happier too. And you're not shitting yourself the whole time you're in a trade because you're like, oh, I don't know what I'm going for. I don't know what I'm this, what I'm that. Knowing the pip values, knowing what they mean, and knowing how many you're going for, very, very smart. Definitely the way to go about things. So in conclusion, a pip in Forex trading refers to the profit potential that can be made by making a deal using a financial instrument based on the fluctuation of exchange rates over time. It seeks to... Wait, what? Okay. Well, it seeks to skillfully handle the risks and threats that traders face with great abilities. That makes sense. Literally, what it is you're doing is setting out with a plan. That's why it's important to understand how many pips you should be going for. The goal is to effectively assess the overall risk, take advantage of the price that has risen or fallen in relation to a index or currency, and depending on whether it is high enough as an opportunity for profit. Okay. Yep, again, one against the other. And smallest unit of price that can be quoted in currency trading. That's effectively what it is. Smallest unit of price that can be quoted in currency trading. And it's calculated based on value of this in that against value of that in this. Changes depending on the currency pair. And the pips you're aiming for will determine your take profit and your stop loss in your trades. So that is what, oh yeah, this as well. These are numbers that you will see. They're kind of presented strangely. So with gold, it's like you'll see like 1856 point blah 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 blah, right? And you'll go up by pips. So you go from like 0.2 to 0.02 to like 0.05 or go up to the next kind of whole number. That right there in this example, 4th decimal place, right? So that represents 2 pips. That's for the Euro USD standard kind of currency pair. So that's a good example, actually. This right here is a good formula for this specific pair. The value of 1 pip is calculated as follows. Pip value equals contract size into 1 pip. So it's the size of the contract, basically. That's the pip value. 100,000 times, all right, so you move it to the 4th decimal place, which means the value of a single pip is $1 US. Okay, no, that makes sense. That makes sense. Sweet. That concludes our episode on what is a pip in Forex trading. I hope that helped. If it didn't help, do let us know why it didn't help in the comments below. And if it did help, leave a like. Do remember to subscribe. We are the Cryptoverse DAO. Thank you so much for watching. Enjoy the rest of your day. Bye-bye.